In this video of the perfect momentum strategy, we are going to go over the inputs tab, and specifically in the inputs tab, we're going to discuss how the back testing dates work and forward testing dates, and also how your stochastics work. There are 6 stochastics in here. Now, starting with the back testing dates, you can literally punch in any dates here as far as your Tradingview chart goes back, and you can look for trades within that time frame to see how your strategy would test on those conditions. If you are also looking to do a strategy that will continually move forward in the future as new data in price paints, you can put a future date on here, as I have, 2030, or you could make it even something like 3000. And that way, as new data comes in, your strategy will keep moving forward as your settings are set. You can also have a time zone offset to sync up the exchange with your chart. So your time zone's right here. I'm in a UTC -7, so I put a -7 here, but you can adjust that to whatever you like. So that's it for the back testing. It's really simple as it sounds. You just type in your dates or use the bars here. And if you're looking for a strategy to keep moving in the future, you just put your a future date in the end year up here. Okay, now for the stochastics. This is just one part of many of the options for capturing momentum, but stochastics are very, very good at capturing momentum. Some of the issues with them, though, is that they may not capture the true tops or bottoms, what potentially could be, because sometimes you might need to have longer time frames looking at it. So what we've done is we have added 6 stochastics. Now, let's say you're just using one stochastic, for example, we'll kind of illustrate some of the limitations of just using one, how most people use stochastics in their trading. So we're going to add a stochastic to the chart, and this is we're on an hour chart on Microsoft, and this is looking back 24 bars, and we just want to look to go long when it goes below 1, and we want to close that long and go short when it goes above 99. So these are generally considered very extreme oversold and overbought levels, and we're going to just look at that on the chart. Wait for this to load. Okay, so this is how your strategy may work if you were just using one stochastic right here. Here's your profit, close trades, etc. Actually, not bad at all. And what's actually happening, so I have here in the background, this is the stochastic set on a 24 setting, just so you can see. And you can see when it goes above the 99 threshold level here, you can see the number up here, above 99, and below, let's find one that goes below 1, here for example. And what you can see on the chart is that when that happens here on the chart, we have a long entry. When it goes above 99 here, we have a long exit and a short entry. So it's very simple the way it's working. That's with one stochastic. Now what would happen if we stacked stochastics that had longer and longer look back periods so they could capture true periods of real momentum? Let's check it out. So, and we have the ability to add up to 6 stochastics. Now, this won't be on your screen. I'm just showing you what's happening in the background of the perfect momentum strategy, but just so you can visualize it, this is what's happening. So what I've added is, again, we have the initial one with 24. We're doubling that in the next stochastic. We're doubling that in the next stochastic after that, and we double it all the way down. So what's happening is, as we look at higher and higher time frames, we're getting a truer capture of momentum. So let's see how that actually works. So we have our first stochastic set. Now if we go to the second stochastic and we go to use long entry over here, and by the way, these numbers are all adjustable. You don't have to use the levels I'm using of 1 and 99. You could put 0.01. You could put any level that you want. I'm just using 1 to 99 to show you as a clear example. You can also change your stochastic lengths to any period you want. You don't have to use what I'm using here. You can also have stochastics look at different time frames. So very, very powerful. You have unlimited options with using these. You can also set your smoothing type for the stochastics, set up your smooth. So just know that these are all completely customizable. But back to the example. So now if we have the initial one with a 24 period length on the stochastic, if we use a second stochastic, that's also looking at the same 1 hour chart, but looking back double the time, we click on use stochastic 1. Now what we're looking for, and you'll see the strategy change down here, got a little more profitable. We took less trades, better profit factor. Now what's actually happening, we look at the stochastics. Now we're looking for the same condition for us to have the stochastic go underneath 1, not only on this first stochastic, but also the second stochastic. So we're getting better momentum. So you'll see here, for example, we have a long entry, and we can look at these values over here. See if we can get right on it. Let me get in closer, make it easier. Okay. You can see there, it actually went beneath 1 on both. So this was triggered a long entry for us. And then we could do the same thing with all these other stochastics. So if we want to get even more, a better picture of momentum, we could use a third stochastic looking at double that time frame. And now we took less trades. It's a little less profitable because of our profit, take profit setting that we have right now. You'll see that once I also increase the exits on it, we're looking for a longer time period, this will go way up. But right now I'm just showing you what's happening to the long entries. So now we took less long entries. Now all 3 of these must be below 1 for it to take a long entry. So we have that condition met right here. If we added, let's just add 4th, 5th, and 6th so you can see. So we're going to add a 4th stochastic, 5th stochastic, and 6th stochastic. So we should have way less entries now. And we're going to see the conditions where it all happened at the same time. Let's see if we can find some of those. We go forward in the future, maybe a little more. Okay, that looked like that was one right there. So here, on all 6 stochastics, zoom in a little closer. Let's see what I have set for my 6th stochastic. Okay, yeah, put that below 1. Let's do that again. Okay, actually that maybe was too low of a number for the last stochastic. Let's just have it underneath a 5 like we had it. So we have these 5 stochastics looking for below 1, this last stochastic looking for below 5. And you'll see here those conditions are met. Oh, actually there it goes. It does go below 1. Let's reset that on here. Stochastic 1, same as symbol, below 1. I apologize, I did not have this stochastic set up, so let's set that up. 768. This one could be double the last one. 768. Okay, perfect. Waiting for this to load. Calculating right now. Let's see what's going on. We got 199, 199. And you need to check this a couple times, sometimes, just to make sure you have everything set up to where you want. Aha. Okay. Stochastic below 1. Now let's try it. Now it'll show up over here for sure. Let's see, do I have my settings correct? Use long stochastic 6, yes. Long level beneath 1. Same symbol. Same symbol. So we have the other stochastics. Beneath 1, 24, 1, 48, 1, 1. 94, 1, 1. That looks good. 192, 1, 1. 84, 1, 1. 768. Blank, smooth, on stochastic. Aha, didn't set the smooth on this stochastic. My apologies. Okay, so here you actually do see it does all reach beneath 1 on all stochastics, all 6 of them together. And that triggered an entry for us. Now, if we're looking for better momentum exits, we can now, so we have just the 90 above 99 overbought level on just the first stochastic. We start stacking, let's use the second stochastic. So it's going to now go above 99, not only on this one, but also on the second stochastic. We get some better profit numbers. And now let's see, our entry was here, our exit was over here. Now our exit's over here because on both of these stochastics, it's now above 99. And let's just stack the rest of them on so you can see. Go here. Use this stochastic. So they're all going to be above 99 now. Let's see where we exit now. What happens to our profit and everything else. Okay, that may be too extreme of a setting. Let's try on the last stochastic, maybe a 97, for example. Oh, I had it too. I have it set correctly. Okay, so last stochastic above 99 also. Okay, so we actually do get some entries and exits. So let's check it out. Here, all our conditions were met for all stochastics being underneath 1. Over here, all stochastics did reach above, let's zoom in a little more, above 99. Get it way closer. See what I have set for the last stochastic, above 99. Okay. There we go. So here's our exit over here, and you can see on all these values, the stochastic did reach above 99. Now that's for a long entry system. If you want to, here's what you can also do. We're going to go to our trade directions. And if you want to take a short system, I wouldn't do that on Microsoft right now, but if you wanted to, for example, you could. So now it's going to, every time we have these conditions here, it's going to now short. And when we have a condition like this, it will close the short. You can also do a both system if you want to take longs and shorts at the same time. So we'll see that pop up on the screen. So now we're taking a long here, we're closing the short here. I'm sorry, we're taking a long here, closing the long here, entering a short here, and we'd actually be waiting for our next long entry to close the short. So that's how you can use stochastics. You can also, if you don't want to use the exits, so let me show you this. Let's say you want to, let me just take these settings off first. Let's say you want to enter on very, very extreme oversold levels. So we're going to now select just use long stochastic. So we're going to be looking for anytime it goes beneath 1. And we're going to do that for all the stochastics. So we want to look for really, really extreme oversold levels. We're going to let this calculate for a second. Okay, so now let's say we want to just do this. We don't want to exit on a stochastic overbought level, but maybe we just want to trail price. So enter here and just trail price. So now I can go over to my stop loss. Let me actually change my trade directions also. Okay, we're going to go to just long only. And I'm going to set a stop loss and a trailing stop. I'll show stop loss. And now I'm going to use a trailing stop of, say, 15%. So we're going to enter here and just trail price. Let this calculate. Okay, and you can see that. We entered here, we trailed price, and we actually exited over here. Same thing over here, entered here, trailed price, exit over here. And then you can do the same thing for shorts. So if you wanted to enter when all of them were above an extreme level, you can use the short stochastic, all above 99 on all stochastics. And then you'd want to change your system to a short instead of looking for long directions. And same thing, we'll keep the stop loss and trailing stop. It probably won't perform very well on this chart since it's a very bullish chart, but you can see how it works. So that way you can take shorts or longs just based on extreme stochastics measurements. So there's unlimited ways to use it. You can use these two together. You can use long and short together. You can just use long only or short only. You can use any combination of stochastics. You can use all of them together, all of them individually. You can change each of their settings. So there's unlimited ways to use it. And then you can, of course, use that with any other setting. I'm not going to go into all the other oscillators and RSIs, Connor's RSIs, etc. In this video, we have different videos for that, but you can choose, you can mix and match your stochastic settings with any other setting in this strategy and really look for very, very specific overbought or oversold conditions and momentum conditions. So that's it for the stochastics part of this perfect momentum strategy. Thanks for watching and enjoy. Thank you.